Well, Wednesday's shaping up to have massive implications for the stock market. Now, before President Biden makes his pitch to the American public for more taxes, ostensibly on the rich, the Federal Reserve will wrap up their two-day FOMC gathering. Now, it's widely expected there will be no new action taken, but all eyes will be on whether Jay Powell and company begin to sort of telegraph the eventual rate hike. Joining me now, President of Bianco Research, Jim Bianco. Jim, Jay Powell is something of an enigma, right? I mean, at the Federal Reserve, he's not an economist. He speaks in plain language. He talks about internal pangs of sympathy for the homeless. He walks by them. He sees them. He even says their presence must be felt in the room as the FOMC makes their decision. So with all of that in mind, he also says that, whatever new metrics you think are out there when it comes to hiking rates, he can see them already existing within the already existing mandate. So with that being said, do you see them as a de facto rewriting of what their job is, what their role is, and how does it change what they might normally have done in these circumstances?
De facto rewriting, yes. The Fed has a dual mandate of keeping employment as high as possible and inflation as low as possible. Let's translate that. They could do anything they want under that mandate. And he has rewritten what we understand the Fed is supposed to be doing, and that is they're supposed to be vigilant about the level of inflation. The old famous line that they take the punch bowl away just as the party's going, that no longer applies with this Federal Reserve. They have talked about stimulating the economy to the point of trying to get the unemployment rate down as low as possible, even if they have to risk higher inflation. That would have been heresy for like a Volcker Fed or even a Greenspan Fed to say something along those lines. But now that's the way that the Powell Fed works.
So, but that being said, then, the flip side of that, Jim, is that they've been trying for a long time to get inflation to 2%. They used every tool and made up a bunch of them, and they still haven't been able to get it to that level. Is that also a cause for concern?
To some extent it is, because it suggests that they're not in control of inflation. If they can't get it to go up, and you're right, they've tried everything to get it go up. Whenever it does start to go up, and let's remember, I still believe inflation is still cyclical. There will be periods of up and down in it. I'm not so sure they have the tools or the whereabouts to make it go down. They say they do, right, but they've shown that they can't get it up, so I'm not sure that they can get it down either.
So let's talk about then, so far this earnings season, 45% of companies have mentioned inflation in their conference call. To put that in perspective, that's a 300% increase from a year ago. This gets back to your notion of whether or not the Fed is in control or is the marketplace in control, and will they be able to keep this promise of holding rates down until 2024? It seems impossible right now.
Yeah, you're right. I think what's really worrisome is that so many people are talking about raising rates. Kimberly-Clark and P&G have already pre-announced that they're going to raise prices, coming this fall as well, too. And ultimately, I've always been of the opinion the Fed could say anything they want about inflation, and they could genuinely mean it. But it's going to be the marketplace that's going to decide. If you, the Fed, say, I think we could tolerate a higher inflation level, and the market throws a fit, then you've got a problem. If you say you're going to tolerate a higher inflation level and the market is okay with it, then the Fed is going to be okay with it too. And by market, I mean interest rates. Interest rates have been trending higher now for the last several months. I know they've kind of backed off a little bit in the last month or so, but the trend is still higher. If that trend of higher rates reasserts itself on the fear of more inflation, that could be the market rioting, that we don't like it, and that the Fed is going to have to respond to inflation, even though they say they don't want to.